For those following the cryptocurrency world, the burning question right now is whether we'll see a Bitcoin rally in the last months of 2024. At the end of September, following a broad market rally that included the main stock indices, Bitcoin broke past $66,000 again before slightly pulling back. Then it attempted once more to break out of this sideways phase that has dominated recent months, aiming for a bullish breakout. In this video, we'll explore what we might expect from Bitcoin's price and, by extension, the entire cryptocurrency market for the remainder of 2024. But first, let me introduce myself. I'm one of the coaches at Unger Academy, and now let's dive right into the heart of the topic. Some analysts are even forecasting that Bitcoin could reach around $100,000 by the end of the year. This estimate is driven by several factors, especially expectations that Bitcoin will mirror its past market cycles following the halving. There's also the potential impacts of the upcoming US presidential elections, scheduled for early November. Moreover, historically, the last quarter of the year is when Bitcoin tends to perform the best. So let's take a look at the key drivers for the last 3 months and beyond for Bitcoin's future. We've already mentioned the statistics. Bitcoin has historically performed better in the last quarter than during the rest of the year. October in particular has been nicknamed Uptober, due to its typically strong performance, as we'll see. The general expectation is that, as mentioned, Bitcoin will follow its post-halving cycle as seen in the past. However, unlike previous years, there are additional factors this time that could influence Bitcoin's movements. Notably, the recent introduction of Bitcoin and Ethereum ETFs, which have continued accumulating cryptocurrency over the past few months. As well as the anticipation surrounding the US elections in early November, the winning candidate's policies could affect Bitcoin's performance. Additionally, the macroeconomic conditions and geopolitical situation are vastly different from those previous halving cycles, especially for Bitcoin and the broader crypto market. All these factors could influence the market movement and prices. So it's definitely not easy to predict if the past will repeat itself in the same way. That being said, if we dive into some statistics and numbers, something we systematic traders love to do, we can see that historically, the last quarter or Q4 has shown the highest average percentage returns, around 81%, as we can observe from these CoinGlass charts. October in particular, as we mentioned, has displayed average returns of around 21%, and in 9 out of the 11 years from 2013 to 2023, it's been positive. So it's more than earned the nickname Uptober. From a systematic trading perspective, one could even consider taking advantage of this pattern, with a strategy perhaps buying at the beginning of October and only going long during this period. However, given the relatively short history of Bitcoin, the statistical relevance of these numbers is limited. So while tempting, it might be a bit risky. Still, it's something worth considering. What perhaps fuels the most optimism for a Bitcoin rise is its cyclical behavior post-halving. Everyone's wondering if history will repeat itself. Typically, after a halving, there's a lateral period of about 160 to 170 days, after which Bitcoin has historically broken past its previous all-time highs, sparking a bull run. We're now beyond this period of a few days, yet Bitcoin hasn't broken past its previous high of around $73,000. We're still in an accumulation phase, and speculation can run wild from here. There are estimates from this one from Bitbo.io, which projects the past 4 halving cycles onto the current one to predict what might happen if the cycle repeats. But as we've said, this is just hypothesis, a projection based on the past. What sets this period apart from previous ones is the presence of Bitcoin ETFs, which have consistently been accumulating Bitcoin since their launch in early 2024. Despite the market's sideways movement, this suggests that if the market takes off, these ETFs could provide an additional boost. Consider that these funds now hold about 5.2% of the total Bitcoin supply, which is significant given how young these financial instruments are. They've only been around for 10 months. Then there are the US presidential elections, which, as mentioned, could also act as a market catalyst, with geopolitical tensions possibly influencing the election results. Standard Chartered, for example, predicts that a Bitcoin rally might be favored by a Trump victory, who is known for being more pro-crypto. He's even promised during his campaign to consider Bitcoin as a potential reserve asset for the US, which could be used to reduce the national debt of over $35 trillion. On the other hand, a Democratic victory could lead to a short-term Bitcoin pullback, which might actually be a great entry point for those looking to capitalize on a dip. While the election might impact Bitcoin in the short term, it won't undermine Bitcoin's fundamentals. So for medium to long-term investors, this could be a good opportunity to lower the average cost of their positions for a longer-term view. Finally, global macroeconomic conditions, like inflation in major economies and the monetary policies of central banks, naturally influence the crypto world as well, making comparisons with previous cycles less reliable since conditions were entirely different back then. A potential economic crisis or geopolitical turmoil, like the ongoing wars, could increase volatility. While this presents an opportunity for traders, it could also drive more demand for Bitcoin, as it's increasingly being viewed as a safe haven asset, much like gold, which could positively impact its price. So this is another crucial factor to consider. To summarize what we've discussed, expectations for a Bitcoin rally are high, driven by the regularity of its post-halving bull runs, but also by macroeconomic conditions and the unstable geopolitical environment, which could lead to higher demand for Bitcoin as a safe haven asset. The outcome of the US elections might also serve as a catalyst for the next bullish cycle. However, as we've seen, caution is needed. Just because the past followed a certain pattern doesn't mean it will do so again. There are many factors that differ from the past, so all we can do now is watch how things unfold at the close of 2024 and see if our predictions hold true. That's all for today. If you're interested in topics like this or systematic trading, you're in the right place. I recommend clicking on the link in the description, and we'll see you in the next video from Unger Academy.